Now, in the quest for yield, many fixed income instruments have simply been unable to deliver returns above inflation. But with dividends from shares accounting for a large portion of the total return investors can receive from the asset class, some investors, like Prescient Investment Management, argue equities should be a natural starting point for yield-seeking investors. Aldria Fraser joins us from Cape Town to share her insights. And perhaps let's just start right there, Aldria, in terms of your view when it comes to dividend-yielding stocks and the part that they need to play in your portfolio in the current investment climate.
The dividend yielding share should definitely not be confused with interest-bearing assets, because the risk associated with the two is obviously very different. So if you have the need to be in an interest-bearing type portfolio because you are short-term or whatever, that is where you should stay. Dividend yielding shares obviously have a much more risky nature, and they are a longer-term investment. But they are a great investment, and I think particularly if you have the ability to have a diversified portfolio across asset classes, using dividend yields to sweeten portfolios can be very attractive.
Aldria, just to come back to that stat, I've read varying accounts on, or varying numbers, I guess, with regards to the contribution dividends make to the total return. So when we talk about indexes like the JSE All Share or the Top 40 Index over a period of time, for instance, let's say 10 years, how much of that total return comes in the form of dividends?
Well, it depends obviously on the cycle. If you take the All Share back to the early 60s, then the average dividend yield has been around about 4%, so that's a significant return. And if you then look at dividend growth over that period, that was closer to the 10 to 12% range. Of late, dividend yields have been a bit lower, closer to or between 2 and 3%. But still, it's a significant return, particularly if you reinvest and compound that dividend.
That's actually a very interesting point in terms of the reinvesting of dividends. Do you find that the investor is well versed in generally reinvesting the dividends, Aldria, or do they take their money and run, so to speak?
Well, I think particularly from our stance, where we obviously have unit trust that we do for people, there we find that a lot of people do tick the box to reinvest their distributions, which is obviously mostly in an equity fund, mostly dividends. So from that perspective, it would be yes. Where in income portfolios, it's often different because people need that income distribution to actually live off.
Aldria, we want to know how you select these dividend-paying stocks, because obviously I suspect there's a couple of companies, maybe 25% of the companies on the All-Share Index that have been consistent dividend payers and increasing their dividends. What are some of the things you look for in a dividend-paying stock to ensure that not only you're getting a good yield today, but that yield will grow at above inflation rates in the years to come?
Well, I think if nothing else, Prescient is always very different to what other people will tell you. So we start out, we're a much more mathematical and risk-focused company. So I would say when we talk about our equity income fund, it's probably best to compare it against the JSE Divi Plus index or something like a Satrix Divi Plus. So the key in that specific fund is to look for shares that pay high dividend yields. So we will have an element of looking at the current dividend yield of that fund. But I think what you don't see when you look at that is that there could be poor prospects for a company going forward, or even if you look at forecasts, the forecast may just purely be wrong. So we have more of a sentiment indicator where we look at what the market is actually pricing in for the prospects of the company. The results have been a lot better, and that is largely by not just looking at historical dividend yields, because what we have found is that things like a Telkom or an Able often slips through, but the prospects is ignored. So our fund would have missed pitfalls like that, where you have good historics but poor forward dividend yields.
Aldria, I just wanted to see where listed property stacks and all this, because that would be the natural starting point for me in finding a good dividend-paying stock. Is that included in the dividend universe that you look at, and what is your view on the listed property sector for that reason?
That's a good question. We do include it, but what we do is that we almost put a hurdle or a tax burden on that dividend, because obviously that is taxed differently to normal ordinary share dividends from other industrial companies or so forth. So we will take a 40% knock, if you want to call it that, on the dividend of a property stock, and it then has to compete on that basis with the rest of the universe. So we will include it, but only if it makes that hurdle. I mean, in general, if you look at our portfolios at the moment, we don't have a lot of property shares because we just think the cycle of where property companies are now is not the best one to be, particularly if you think that bond rates should be higher, which we also think. There are a few that sort of creep through into our portfolio, but they certainly come through towards the lower end of the portfolio rankings.